Every red and green candle you see on your trading screen today was born from ashes, blood, and a 300-year-old secret. Long before Wall Street existed, one man discovered that markets are not moved by supply and demand. They are moved by human emotion. While samurai were killing each other for land, one man was conquering Japan without ever drawing a sword. He wasn't chasing territory. He wasn't chasing power. He was chasing something far more dangerous: the ability to read the future. His name was Homma Munehisa, known in the West as Munehisa Homma, and the secret he uncovered still controls how the world trades today. The Rice Secret: How a Japanese Trader Invented Modern Trading. In the 16th century, Kyoto served as Japan's major rice trading hub. At the time, the Japanese economy revolved around the production, processing, and distribution of rice. However, during that period, Japan was ravaged by constant, bloody civil wars over land. Kyoto, then the capital of the rice trade, was completely devastated by war. The market was razed by fire, and its price records were lost. A century later, a new rice market was established in the port city of Osaka, after the Tokugawa shogunate ended decades of conflict and brought peace to the nation. At that time, the small coastal city of Sakata, in northern Japan, was home to one of the wealthiest families in the country, the Homma family, who were prominent landowners. In Osaka, there were two rice markets: the spot market and the rice coupon trading market. These receipts were issued by warehouses to farmers who stored their harvested rice. The holder of a receipt could exchange it for gold, silver, or copper coins, or even speculate, betting that the receipt would increase in value. That rice futures market was 4 times larger than the physical market. Approximately 1,300 traders were active there, buying and selling those receipts at the Dojima Rice Exchange. By around 1710, this rice receipt futures market already closely resembled today's futures markets. Traders at that time recorded price movements differently from those in Europe, which relied on line charts and price anchor charts. Instead, the Japanese used a unique method: candle-shaped charts, known today as candlesticks. They said the candles burned themselves away in order to give light to humanity. The market was represented, following Eastern spiritual tradition, by yin and yang. Yang, in white, symbolized a rising market, while yin, in black, represented a falling market. Among the traders of that era, the most successful were those from the city of Sakata, who followed a trading method known as Sakata's Constitution. Sakata's Constitution divided the market into 5 distinct phases: from the bottom to the gap, from the gap to the trend, from the trend to consolidation, from consolidation to trend resumption, and from trend resumption to the top. In 1724, the youngest son of the Homma clan was born, Munehisa Homma. By the age of 5, he was already accompanying his father, one of the largest landowners in Japan, to rice trading negotiations. Even in his teenage years, Homma impressed everyone with his sharp mind and attention to detail. Because of this, he earned his father's trust and a promise that he would inherit the family business, a rare occurrence at the time, as the inheritance normally passed to the eldest son. After his father's death, Munehisa Homma, then 26 years old, took control of the family fortune and began a detailed study of the candlestick price records kept by rice receipt traders. He meticulously examined rice price records dating back more than 50 years, from the time when the market operated in the gardens of the Osaka merchant Yodoya Koan, whose wealth was later confiscated by the shogun, driven by envy of his social ascent. Homma, a great admirer of Yodoya's wealth-building skills, carefully analyzed those price records and began to notice recurring patterns that emerged whenever prices collapsed due to bumper harvests or surged because of extreme weather. By observing how prices action, he realizes it was often possible to anticipate future market movements. Homma's studies became the earliest known records of systematic price backtesting. Through meticulous analysis and by keeping his discoveries secret, Homma began aggressively increasing his positions in the Osaka rice futures market. His hometown, Sakata, was 600 kilometers from Osaka. To remain in Sakata, while still trading in Osaka's futures market and managing his rice farms, he built his own intelligence and order routing network. Homma stationed a network of more than 300 men on rooftops, hills, and mountain lookouts to relay signals using flags. He also established a network of field agents who traveled across Japan, tracking crop planting, harvests, and weather conditions. Armed with this information and his mastery of candlestick patterns, he executed his buy and sell orders. To Homma, the futures market was a battlefield, where the skills and strategies of a warrior mirrored those of a trader. Even the names of the candlesticks and their patterns reflected this military imagery. Homma was the first to observe the recurring power of the number 3 in the markets. His studies revealed the existence of Sanzan, 3 mountains, or a triple top. Sansen, 3 rivers, or a triple bottom. Sanku, 3 gaps, often seen in strong trends. Sanpei, 3 soldiers, referring to 3 consecutive candles of similar size that signal trend strength. Sanpo, referring to the 3 possible actions: sell, buy, or wait. This recurrence of the number 3 would also be observed a century later by Charles Dow, who argued that markets move through 3 trends, that the primary trend unfolds in 3 phases, and that there are only 3 possible directions for any trend: up, down, or sideways. The number 3 remains a recurring structure in Western technical analysis to this day. In the head and shoulders pattern, the inverse head and shoulders pattern, in triple tops and triple bottoms, in the 3 types of price gaps, in the 3 types of triangles, and in the 3 corrective waves. Another 3-part framework is price, volume, and open interest. Homma believed that if you were unsure about a trade, it was better to wait 3 days. If, by the 3rd day, prices were still moving in the same direction, the trade would still be profitable. The mastery he gained from reading candlestick patterns allowed him to execute a streak of 100 consecutive winning trades in the Kuramaye market in Edo, then the nation's capital, earning him the title God of the Market throughout Japan. Beyond being a renowned trader, Homma was Japan's largest landowner and rice producer, controlling the entire supply chain and owning numerous warehouses. He also acted as a financier, lending money to other major landowners to fund their crops, and reinvested his profits into acquiring even more land. His influence extended to rice shipping and the trade of various other commodities. At the time, Homma's wealth was compared to that of the Mitsui family of Edo and the Sumitomo family of Kyoto, the 2 wealthiest clans in Japan. In Japanese folklore, it was said that when the day began sunny in Sakata, his hometown, it would surely be cloudy in Osaka and stormy in Edo. This was a reference to the market reality. If the harvest was plentiful in Sakata, rice prices would fall in Osaka and crash in Edo. His mastery of candlestick trading was guarded with strict secrecy during his lifetime. Nevertheless, this protected knowledge did not prevent him from becoming one of the first to write about the profound influence of psychology on market behavior. His work was based on the parable of the three wise monkeys, who hear no evil, speak no evil, and see no evil. This parable reflected Homma's view of the market. He stated, "I am not interested in hearing what others say about the market, or in watching what they do. If I want information about the market, I ask the market itself." This insight is remarkably similar to the modern understanding that prices discount all known facts. Homma's expertise was eventually recognized by the shogun, who granted him the prestigious title of samurai and appointed him as his personal financial advisor. His wisdom became a cornerstone of both business and Japanese popular culture. Yet the West would not discover it for centuries. That barrier was finally broken by Stephen Nyson, a North American technical analyst at Merrill Lynch, who traveled to Japan in the 1980s to study the candlestick method. From that moment on, candlestick patterns spread across the world and were translated into countless languages. Homma did more than trade rice. He decoded human behavior. He transformed emotion into structure, and chaos into pattern. And centuries later, every chart on every screen still echoes his method. The market reveals who you are, long before it reveals the price. And Munehisa Homma was the first to stop chasing the market and listen to its rhythm. If you want to understand the real language behind price action, download the research notes in the description.